Good afternoon. We're looking at the S&P. It's been a peach. It's done exactly what we thought it would do. It's actually taken out the yearly low, which was at 2532. Our low this week has been 2530. Now, as we go to press, just before the open, well, not just before the open, but we're trading at the 2568 area. Now, if you look at the weekly pivot, that's at 2622. When we go onto the daily chart, you'll see that the daily pivot is at 2558. Now, we have known that this was going to be our target area. You know, I've said it and I've banged on about it ever since we did this little thing here 3 weeks ago. All right. We went down, we came up, we could not break that 9-week average. It just wasn't going to break. Okay? Now, because of that, and because that, the 21 week, because the 21 week moving average held the top side not once, but 3 times. Okay? Now, when it does that, there is a reason why we scream to go short. You can see that when we topped, we actually had the top there as well at 2801. And if you look at our top there, it's 2815, 2800, 2816. It was all around that area. And when we rallied, okay, back in March, this was where we got to before we had another fall. That then took us back to taking out the yearly high, which we said it was going to do, and now it's fulfilled its downside objective. What now? Where do we go from here? Now it's done it. It is the week before Christmas. We are going to see thin, whippy markets. You know, look at the NASDAQ, which I'll take a look at in a bit. You know, we're up. We're looking at the Dow up. We're looking at the S&P up, which is now trading at 2570. So, you know, after we reach a target area, unless we take out that 2507, which you can see quite clearly here, and this is taking this from the bull run of 2016. Now, I can't reiterate enough how important this level will be. But let's take a look at a longer term chart. You know, this is going back to 2009. You can see there the market is going to fall. You know, it is. If we take out 2507, we're looking at 2408. We're looking really here at the 2076 area, and you can see here is where we topped out in 2015, and that was around about the 2134, 2140. I think it was the 2134 area, and that's where we topped. We came down at that point. That was a 38.2 move, and it just held, and it held that area there at 1820. Now, I know it's very difficult to get your head round a change of trend. I understand that. But being a technical person, I look for divergence like this. That's what I look for. We've only just started to turn down on the monthly charts on the ROC. So let's now, we've seen the longer term. Let's look at the daily. It's not looking good, is it? You know, it really isn't. So we do look to these longer term charts to define what we're going to do today. Now, if we open where we're actually trading at the moment, there is a really good chance for a recovery. So let's just stick on a fib retracement. Let's assume that that there is the low, because that there is the target area we were going for. So if I put this on here, now pull it across. So we're looking at 2594. And if we look a little bit further, you can see that the weekly pivot of 2622 isn't that far away from the 38.2 at 2633. Now, as it's reached its target area, I would find it difficult to short this market at this point. I think we want to be short if it bounces back up to 2622, 2633. As I said, we have achieved now our downside target. Our daily indicators are on the floor. We're not yet turning higher, so it will still be a case of selling into strength. Okay, that's my bit done for the S&P. Good luck, and anybody that went with this for the target, well